Hello everyone. Today I'm going to be talking about a day trading strategy with Forex. Now this one is, if you guys see my last video where I talked about doing it with the stock market yesterday, this is pretty similar, but I'm going to be talking about it with Forex and how to, it'll basically work with any Forex pair, but there's some Forexes that move a lot faster than some of the others, like the Japan one. It moves pretty quick, but the strategy will work just as well as any of the other Forex. Now, this is a very the strategy and the signals you got to look for. They don't happen a lot, so you got to look for them because you're doing this on a weekly, so you're waiting for the RSI to cross, so that's it does take a while. So if you can't find it crossing on the weekly, what I recommend is doing it on the daily. But today we're going to be looking at the results you can get if you do Forex trading on the weekly. You got to load up the charts kind of like I do and wait for these signals. The first thing I look for is the signal on the weekly, and if it's not there, I'll focus on the daily, and I'll probably talk about that next week. But today I'm going to be teaching you guys how to trade on the weekly with any of the Forex pairs with this strategy. So load up my charts, and I'll show you how to get it done. Okay, so I'm going to be looking at a couple examples here. I'll be looking at the ones that I've done is the Japan and the Australian. But we'll look at a couple of these to get a couple examples here. Start with the Japan dollar here, and we're going to focus on doing it on the weekly. Now, with this strategy, it's pretty simple. Now, each of these candles represent 1 week, so you got to keep that in mind. So, what you want to do is you want to look for moments. Now, let me show you the emails that I use right here. I go to my. If you guys haven't seen my other videos, I talk about this in almost every one of my videos, trading videos, because I find this works really well. I go to indicators and I'll look for three smooth moving averages. And what this does is it allows you to have 3 moving averages combined into one. And it works really well if you do trading on your phone. That way there's less clutter, because otherwise you would have to have 3 indicators here, and it gets kind of cluttery. But you basically want to load up your EMAs here with 5 and 8, and that's the one I use a bright color. And RSI is very important for this strategy. The strategy is actually really simple. What you want to look for first is the moment on the weekly when the RSI is crossing through the yellow line. That's what you have to look for. So if you do find that is your entry point. But you also want to check your moving average. And you want to check your moving averages because you want to make sure that when it's crossing up, that the moving averages they're going in the same direction as the RSI. So it doesn't have to be exact, but it has to be getting pretty close to going in the same direction as the RSI. So you'll be able to spot all the moments, good moments of getting in. So you will also spot the moments of when it's a bad trade, because if your moving average, if your RSI is crossing but it's not happening on your moving average, that is a bad trade, and I wouldn't take it. So if we look at the Japan dollar here, now remember these are on a weekly. This is on a weekly basis. So when it does cross, it does not cross a lot, so you have to take note of this. The Japan dollar is almost about to cross down, and that is today, that is July 10th, and the last time it actually crossed was February 6th, so this does not happen a lot. So that's why I said before you start your day, this is the first thing that I look for. I look for if there's any crosses on the weekly. If there isn't, or it doesn't look like it's going to be for a while, I'll go down and I'll do the day. I'll do it on the day, and that's something I'll cover it the day. If it continues to cross after 3 days from now, so I might wait on it, because 3 days from now, if that RSI crosses, it's a clear indication that it's going to keep going down. But let's look right here. Let's look right here where it crossed here before. So if you came in at this point, which was February 6th, which was a while back, you came in here and you just wrote it out. And the good thing about doing Forex is, compared to doing option trade, is you don't have to buy contracts. So you can just set this and wait. Just wait for it to go. You don't have to worry about contracts expiring. That's the great thing about this strategy. So if you rode this out, for 21 days, see, the 21 days, that's 3 bars. You had a difference of, I think that's 6,000 pips. So if you had $1 lot size here, you would have made $6,000 right there with the Japan dollar. So I'm just going to use $1 as an example. But if you're doing Forex in the beginning, you need to start small. You need to start at 1 cent, then 10 cents, and just scale your way up. But let's look at all the other moments that it crossed. We see it crossing. We'll do this a couple times, and we'll look at a couple other scenarios with some other Forex. So you see it crossing down right here. So you come in here and you did a sell. And you just rode this out till down here. So this is, 63 days. This is 63 days, and there was a difference of, I think this is 15,000 pips. It's a 15,000 pip move. So if you had $1 lot size, this move in 63 days would have been close to $16,000 here. So let's look again. One more. I'll do one more for Forex. So let's see where it crosses. Well, we'll look at the RSI. Let's do this one right here. Okay, so we see the RSI is crossing up. So we would come here, right here where the RSI crosses up, and we just ride this whole thing out. This one would have been a huge win. This one would have been in 217 days, there would have been a difference of 31,000 pip. It was a 31,000 pip move. So if you had $1 lot size right there, you would have made close to $32,000 right there. That is a big move right there. So let's look at some of the other pairs. Let's look at the Australian dollar. It's a little bit easier to figure out your pips on the Australian dollar. This is what I have currently going. This, on my demo account. See, it hasn't quite crossed yet, so it's trying to make up its mind. You see the RSI, but I think eventually it's just going to go down. I did it a little bit too early. So if you look at this is where I based my demo account on. It's it got in a little bit too early. It hasn't quite crossed yet. So that I think I got in a little bit too early there, but it's just a wait and see. It's just testing this whole theory out. So let's just look here on previous times, and just like everything else, you see it crossing here. This was on. Okay, so it crossed, last time it crossed was right here, February 13th. So if we came in right here, and we rode this out till the bottom here, this is a 4,000, you'll notice that the Japan dollar moves a lot faster, and it moves a lot more than the Australian dollar. So there's a big difference in the pips. This one is a 4,000 pip move, so if you had $1 lot size, you would have made $4,000 right there. Let's look again for another cross. It happened right here. So let's see, it happened right here. So this would be a good crossing point. So if you wrote this out, for 84 days, this is a 6,000 pip move. This is almost a $7,000 move if you did it with a dollar lot size. Let's look at a couple other times, and I want to go to some other Forex pair as well. Let's look at this one right here. You see it crossing down right here, and we just waited out till here to here. This is a 28-day move. This is about almost a $5,000 move if you're dealing with a dollar lot size. So I'm going to do one more time with this. Let's do this moment right here. It's crossing up. This was on February 7th. So ride this one out. You got to keep in mind that each of these candles is a week in time. So if you rode this out all the way up here, this is 56 days and it's 41,000. So it's about this is a little over a $4,000 move if you did a dollar lot size. So let's look at one more pair. Let's look at the British pound. Let's look at this one here. Wait, no. Let's do British pound against the U.S. if that's there. If they have it. British pound. Okay, I think this one's it. Okay, let's test this one out. So what you want to look for basically is you want to look for moments where it crosses, which is right here. You see it crossing. The last time it crossed was March 13th. And you also want to make sure that your moving average is close to what the RSI is doing. So if you came in right here and you rode this one out, let's just do sooner than that. We don't want to wait 119 days. Let's just do 35 days. 35 days, this is about a $4,000, this is a $4,000 move if you have a dollar lot size. So I'll do the two more times. We see it crossing right here with the RSI, way down here. So if we come in right here, and ride this out for, let's just do 30 days. Okay, this is a $7,000 move if you have a $1 lot size. We'll do one more time. We'll do one more time with this strategy here. See it coming, crossing down right here. If you wrote this whole thing out, but I'm not going to do it. We're just going to do 30 days. Crosses right here, right there, and it'll cross all the way down. Okay, let's do 30 days. Just 30 days. Get 35 days. Okay, this is a $4,000, almost a $5,000 move if you had a dollar lot size. So anyway, this strategy works extremely well on the weekly. You can really find all those key moments when it comes to, if you want to do your trade, you'll really find the bottom of it really easy, because if you're doing it on the weekly, you really don't have to worry about it going down to a bottom. It could, but when you come in on the weekly, it has a very good chance of just staying in that path of going where, if it wants to go down or up, it has a good, if you notice in the charts, every time it crosses, it doesn't really go back down to that same spot that it was. So it's a very good strategy, in my opinion, for Forex. Now, out of the three Forex pairs that we looked at, I think the Japan dollar has the best results with your money, because for some reason the Japan dollar moves a lot faster than some of the other ones. with the Australian and the British pound, you saw the average would have been probably about 4,000 pips in a month. But with Japan, it's I think we saw like 7,000 in a month. So Japan is definitely my favorite out of everything. Japan and the Australian are my favorite, but Japan moves a lot faster. So if you get really good at finding the patterns, you can make a lot with the Japan dollar. Not financial advice, but anyway, if you guys like this strategy, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.